delivering record profits to the launch of a slew of new hotels and multiple brands. The past year has been an exciting one for the CEO of IHG Hotels and Resorts. Elie Maalouf took over as the CEO of the UK-headquartered hospitality company in 2023. IHG operates brands like Holiday Inn, InterContinental and Six Senses. Under his leadership, IHG's operating profits surpassed $1 billion in 2023 and revenue crossed $2 billion. The company has also launched its premium brand Voco here in India. Hello and welcome to Global Dialogues. I'm Shereen Bhan, and joining us now to tell us more about IHG's plans for India as well as the outlook for global growth is Elie Maalouf. Mr. Maalouf, many thanks for joining us here on CNBC TV18. Appreciate your being here. Before I talk to you about the outlook for the world in general, let's talk about your visit here to India. The last time when we spoke with the leadership at IHG, you had big plans for India. You were hoping to double your business here in India over the next 5 years. What's the strategy? What's the outlook? How confident do you feel?
Well, first, Shereen, great to be with you today. Thank you for spending time with me. I'm very pleased to be back in India. It's my first visit here as global CEO of IHG Hotels and Resorts, but I used to come to India a lot during my previous experiences. It's always been a very exciting market, but it's hitting an inflection point in terms of growth of GDP, growth of the middle class, substantial infrastructure, foreign direct investment, all those things that really drive travel for the middle class and also for the upper classes. Our strategy is very consistent and very exciting for India. Yes, we plan to double our hotel size and rooms over the next 3 to 5 years. We have 46 open hotels, nearly 50 under development right now, but we're really just getting started in a massive country like India, 1.4 billion people, but it's really multiple countries within a country, many different regions, zones, lots of different dynamics, strong domestic travel, growing international travel inbound, growing international travel outbound, looking for that to go up by 4 times over the next 10 years, and manufacturing that's growing in the country, tourism, religious tourism that's growing, spiritual tourism, all the aspects that make this a very dynamic hospitality market for us. We plan to grow in our mainstream brands, which is yesterday Holiday and Holiday Inn Express. We plan to add many of our other mainstream brands. We recently launched Garner in the US, in Europe, in Japan, in Mexico, and Canada. I see that brand coming to India in the near future. We have 3 or 4 other mainstream brands that could come over time. And our luxury lifestyle portfolio, you mentioned InterContinental and Six Senses, but that also includes Kimpton Hotels and Resorts, Hotel Indigo, it includes Vignette Collection, includes Regent Hotels and Resorts, really what I think is the leading luxury and lifestyle portfolio in the world. And then there are premium business brands, Crown Plaza, and Even Hotels. You mentioned Voco that just came in the first deal that we signed here in India. So we have opportunities across the full portfolio, but also across the full country as it develops further.
Well, thank you very much for a very comprehensive opening commentary there on what the India business looks like for you. As you said, it's at an inflection point, and it's many countries within a country. But, where will the emphasis be for IHG? Of course, you're operating at different price points between budget to, of course, super luxury. At this point in time, given the plans that you have of the 50 hotels under development, the 46 that are already open, given the trends that you're picking up, what will you emphasize in terms of future expansion, future growth?
We believe in a full portfolio strategy. Clearly, at this stage of development in the market, the middle class and the mainstream brands will be the highest volume of growth. So our Holiday Inn, Holiday Inn Expresses, and eventually I believe Garner will be part of this market. I'm not sure when and if we'll bring our extended stay brands to India, but they have a future too at some point. But clearly our mainstream brands will lead the volume growth, the number of hotels, the number of rooms. But from a value growth, our luxury and lifestyle brands and our business brands will make a huge impact. We are going to be announcing a brand new InterContinental hotel in India, a new build hotel, and we're very excited about that. That should be announced this week. We already have 2 Six Senses hotels in this country in remote, exciting destinations, and I think there'll be more to come. So I believe that it'll be across the full portfolio, But from a volume growth, it'll be our mainstream brands, and from a value growth, it'll be our luxury, lifestyle, and premium brands.
Since you are talking about volume as well as value, I want to understand from you what the outlook is like as far as pricing power is concerned. We're back to pre-pandemic levels. Most hotel chains are delivering record profits at this point in time. Do you see that being able to sustain the kind of pricing power that hotels like yours have been able to enjoy in the last few years since the pandemic?
Well, first, I think we need to recognize that pricing in hotels has only really kept up with inflation globally on average. Maybe in some markets more or less than others, but on average, it's only kept up with inflation. We've had 3 to 4 years of higher than average inflation around the world. So eventually a hotel rate has to keep up with that because labor's going up and you have a lot of labor in hotels, food and beverage is going up, energy costs have gone up, and hotel operators need to recover that cost at least. And they've really just last year finally reached parity with inflation on pricing. The other thing that we have to recognize is there's a lot of demand for travel, a lot of demand. People have come out of the pandemic with a strong desire to travel for business and for pleasure, to visit others, to interact for commerce, to experience new destinations that they were forbidden from for many years. And that's really driven a lot of demand, and there hasn't been a lot of supply added globally because of high construction costs, limited labor availability, higher interest rates. Now that's normalizing, but the low supply and the strong demand and the inflation has supported rate increases. We think that there's still room for rate increases because demand is strong, supply is low, and people's desire to travel seems to be irrepressible right now.
Well, speaking about demand for travel, are you seeing any indication so far of the geopolitical tensions weighing on consumer sentiment, or does it continue to be as robust as we've seen through 2023?
We've been operating in the hospitality industry for over 80 years now, and unfortunately, there are always, in some part of the world, not always the same one, but in some part of the world, there are geopolitical tensions, there are conflicts, unfortunately, that arise, natural disasters. We hope that all subside. We hope for an end of all hostilities and suffering. But the reality is we've had to experience it over many years, and we have become experienced on how to deal with it, how to cope with it, how to keep our guests safe, our travelers safe, our colleagues safe. But we're also very broadly distributed around the world. So we're in over 100 countries, and we tend to average out the issues around the world. I would say no, we're not feeling any meaningful impact to demand around the world right now from the geopolitical tensions. We hope they do subside, but it's not having an impact on us right now.
No impact as of today. But let's talk about what we are seeing in China. Of course, the economy there has slowed down considerably. You've got a significant presence in China. What's the indication that you get in terms of both inbound as well as outbound demand from China?
Look, I was in China in September for a week. I stay very closely in touch with our market there. I'll be back there towards the end of this year or early next year. We have to think of China not in a single dimension. It's a $20 trillion economy, the second largest after the US, which is $30 trillion. After that, the economies get much smaller. So it's not a single segment, single industry economy. There are some industries that are a bit slower, like the residential real estate industries, but then you have some sectors that are much stronger, like the electric vehicle industry and artificial intelligence industry are strong. Hospitality happens to still be going forward pretty well. We saw record travel during the Mid-Autumn Festival. We saw record travel during Chinese Lunar Year. And so while the rate of growth on average of the GDP in total is back to say 5%, down from the double digit that it used to be, but it's 5% on a much larger base. I think they printed 5% or 5.2% for the first quarter. So, not bad on a $20 trillion economy. But within that, that's just an average. Within that, hospitality is still doing pretty well. Keep in mind two things about China. First of all, the middle class will grow by about 200 million people over the next 10 years. By 200 million people. To put in perspective, the middle class in the United States is averaged to be about 140 million. So that's a whole nation of middle-class people that now are going to begin to travel, first in mainstream brands, eventually in premium and luxury and lifestyle brands. The second thing is that the penetration of hotel rooms per capita is only 1/7 what it is in the United States. When I joined IHG 10 years ago, it was 1/10. So it's doubled again, it's going to double further. So between rising demand from the growth of the middle class and closing the gap of penetration of hotel rooms per capita, there's still a tremendous opportunity. It's going to make highs and lows. All of our industry markets make highs and lows, but they make higher highs and higher lows along the way. We've been in China for 50 years. We've seen highs and lows. Yeah. We've made higher highs and higher lows. But the fundamentals of growing GDP, growing middle class, and growing supply, which we participate in, are very optimistic for our future in China. I'd say the same fundamentals apply to India. Growing middle class, growing GDP per capita, and really an underdeveloped hotel room industry for the growing travel segment. Those fundamentals are still the same. Now, India is a little bit further behind in the development of the hospitality industry, but it's going to follow a similar trajectory, and it's going to be a great opportunity for us.
Well, that's the India-China comparison that we often hear of. And let's now talk about what you're seeing happen as far as the U.S. is concerned. You were talking about some degree of normalization as far as supply is concerned, but now it looks pretty clear that interest rate cuts that everyone was hoping for in the U.S., that's probably going to be pushed out even further. So higher for longer. We don't know how long that is going to be. What's the impact of that on consumer spending at this point in time, and also for developers like yourself in terms of expansion?
Well, let's remember why interest rates are now expected to be higher for longer. It's because the economy is stronger for longer. The whole point of increasing interest rates by the Federal Reserve and actually other central banks around the world was to lower economic growth, lower job creation so they could lower inflation. Well, inflation's been coming down, but the economic growth hasn't. The jobs continue to grow higher than expected in the United States. Economy continues to be stronger, which means consumer sentiment, consumer spending continues to be strong. Retail sales that came out a couple of weeks ago were much stronger than expected. The job growth for the month of March was much stronger than expected. Now, that's actually good for the hospitality industry demand, right? When job growth is strong, when wages are growing, and when retail sales are up, it means people have a propensity to spend, which is good for hospitality demand. Now, yes, that is keeping rates a bit higher than they used to be before the pandemic, but keeping in perspective one thing, these rates where the 10-year treasuries in the 4s, that takes us back to what they used to be before, economic easing, and the Fed took rates to zero, which looked like normal because it lasted a long time, but really was not normal. So the conditions we have today on interest rates are similar to the ones we used to have for a long time when the industry actually grew very well. It's going to take time for the development industry to adjust to the new interest rate environment, which is really actually a more normal interest rate environment. And we're seeing that adjustment. We're seeing that adjustment. We saw our signings of new hotels grow, 26% last year. Our openings grow 16%. And within those signings, there was a significant ramp up of new build signings, which shows the confidence of owners that they will be able to finance projects and grow them. It's not a V-shaped recovery. It didn't, spike back up to what it used to be in 2019, but it's building year over year as people get adjusted to the fact that the interest rates are higher than what they were recently, but they're not higher than what they've been historically. But the strong demand from a strong economy is what people focus on because their hotels are full and the hotels are making money, which means they're worth building and developing.
Yes, that certainly seems to be the case if one looks at your numbers. But we are going to take a break, Mr. Maalouf, and return to this conversation in just a moment from now to talk about, what's exciting consumers, what kind of consumer preferences you intend to cater to, if there are any more brands on the anvil, and of course, technology and digital transformation and what IHG is doing on that front. A quick break here on the Global Dialogue. We come back for more after this. Welcome back. You're watching the Global Dialogue. I'm Shereen Bhan, and we're in conversation with the global CEO of IHG, Elie Maalouf. Mr. Maalouf, just before the break, we were talking about growth for the IHG group. There's been a slew of brands that you've launched. You talked about Ghana a short while ago. Voco, of course, one of your fastest growing brands in the luxury space. What more should we expect? Is there anything new on the anvil?
Look, when I joined IHG 10 years ago, we had 10 brands. We have 19 in our portfolio now. But it's not as if we're trying to launch a brand a year. We only launch or acquire new brands, and 3 brands were acquired over the last 10 years. When we see an opportunity where guests want to stay and owners want to develop, but we're not present in that space. So we used to have only InterContinental and Luxury Lifestyle. Today we have Vignette Collection. We have Regent Hotels and Resorts. We have Kimpton Hotels and Restaurants. We have Six Senses, because we saw that guests wanted different experiences and owners were building hotels and we were not participating. And so, yes, I would predict that in 5 years or maybe longer, maybe sooner, there will be more brands, but only because it's a dynamic industry. And in a dynamic industry, your strategy and your product portfolio can't be static. Guest preferences evolve, owner preferences evolve, and we will just need to meet those preferences with new products if and when they're there. In the meantime, we're very busy continuing to develop our existing brands, our traditional brands. Heritage brands are doing very well, whether it's InterContinental or Holiday Inn or Holiday Inn Express, and the new brands that we've launched, that's some that you mentioned. We got great demand across all of them, and at some point, if we see new needs from guests and from owners, we'll launch or acquire new brands.
Well, speaking of consumer preferences, what are the trends that you're picking up on at this point in time to incorporate into not just your product portfolio, but also the way that you service customers, personalization, the move towards all-inclusive, and so on and so forth? I mean, these have been some of the trends that developers have been focused on in the last few years. What are you now picking up on? Are there any white spaces that you intend to focus on?
Well, I think what we look at are some of the structural long-term trends. Some others may be focusing on those, but there are some that we need to note. First, there's a phenomenon happening in all 3 of our major markets, probably not in India yet, but say in North America, Europe, and even in China. There is an aging population which is driving a wave of retirements of millions of people, tens of millions of people, that's going to go on for decades. These retirees are the healthiest and wealthiest of any generation, the healthiest and wealthiest of any generation. And among the top 3 things they want to do is travel. They want to travel, explore, see the world, see their grandkids, see their children, see their friends, and see the world, because they're healthier and wealthier than any generation before. So yes, we focus on millennials and Gen Z and Gen Y and Gen X, but let's not forget that over 50% of the population in North America, Europe, and China, and even Japan or Germany is over 50, sometimes over 60. And they will be what's called, they probably need to come up with a better name for it, but the gray market, the gray segment that we all need to cater to. Number 2, I'd say the blend of work and leisure is something that's here to stay. We're very excited about welcoming our colleagues back to the offices post-pandemic and collaborating and working together and co-creating. But we know that many of our customers and many of other corporations, are more into hybrid or more flex work or remote work. And people now are able to work from many different locations. And when they go to our hotels, they're staying, they're vacationing, but they're also working and making sure that our hotels are fully adaptable in the public spaces, in the restaurant, in the bar, in the rooms, in the meeting spaces, for that work-life blend, for that work-leisure blend that people are doing. Now, is somebody actually working when they're staying over a Friday and a Monday in our hotel? Fundamentally, we're happy if you're just staying, but many of them actually say that they're working, and that's fine too. The third thing is rewards, recognition. IHG One Rewards is becoming a deeper and deeper part of our travelers' experiences. We relaunched it 2 years ago. Its growth increased by 50% last year. Our new app is the most interactive, I think, in the whole industry. And with the new tiers, the new levels, the new milestone rewards, people want to be recognized. Membership matters, rewards matters, recognition matters. People want to be recognized for their loyalty, and showing that true loyalty to your repeat customers is going to be an increasing part of how hotel brands are successful. Those are three trends that we think are durable and enduring.
Well, those are interesting, but yes, you're absolutely right. We have to give the grey market does deserve a different label now, different nomenclature. But it certainly is something that is exciting that you spoke of. Before I let you go, I want to understand from you, how
well, maybe
you are
can come up with that label. We look forward. Why don't you come up with it?
I will give it a shot, but I wanted to talk about technology, the use of technology, where you are as far as the curve is concerned on tech adoption, and what it really means for the hospitality business. I mean, it's people oriented, it's people driven. So how do you marry technology with keeping customer experience focused on the human touch?
Well, it's really both. We are an experience business. We're not a technology company, but we are powered by technology to be able to deliver better experiences. We're not powered by technology to give you a technology experience. We're powered by technology to give you the greatest human experience, because people come to hotels for rejuvenating stays, for refreshing interactions, for great meals, for restaurant and bar and dining. That is a truly human, virtual and vital experience that people want to keep, and then they're going to have their devices and the technology that powers it. I'd say we were first in the industry to launch a cloud-based guest reservation system 5 years ago. Today, I think it's the industry standard that allows guests and owners to customize their stay and to do it at the most efficient manner, and to make their selections and to pick a bigger room or a connecting room or a higher floor or a spa or a dinner, and really segment and make and customize their stay. Our new app allows our guests to interact with their rewards in a truly fun and experiential manner. And we saw record downloads last year and strong engagement with our app. And now we just announced a partnership with Google last week to use artificial intelligence to help you further customize your stay and power it, like finding the restaurants in your neighborhood that meet your particular criteria. Hey, IHG One Awards, tell me what are the 5 restaurants next to my hotel when I go to Delhi that have my dietary preferences and meet the mood and selection and price range that I like. And boom, you can get those preferences on your app in your own personal manner. That's how we're using technology to help you have a better personal human stay at our hotels. The last I'd say is helping our guest reservation agents interact with people around the world. It's still a personal interaction many times when you call. Sometimes it's a virtual interaction, a chat interaction, but many times we're using artificial intelligence to help our agents interact better, understand our guest preferences, their cultural norms, how they use language. If they're calling from one place, what does that mean? And so it's always using technology to help you have a better human experience.
Well, Mr. Maalouf, we will leave it there. Appreciate you joining us here on the Global Dialogue. Thanks very much for taking time out to speak to us here on your first visit to India as the Global CEO of IHG. We look forward to hearing more from you and seeing you more often in India. Appreciate your time.
Thank you, Shereen. I'll be back. Take care. Goodbye.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team for now, goodbye and many thanks for watching.